Hey, thank you so much for joining the Bradley Real Estate Group. And today in our newsletter, this is our quarterly newsletter.
Yes.
We have a little more data, and we wanted to talk to you a little bit about some of the fear and uncertainty that some of our clients are having out there about whether or not the housing market is going to crash. What are your thoughts about that, Antonio?
Well, I mean, we've been hearing it in lots of places, the news, and negative information spreads like wildfire. So we just wanted to tackle this and explain to you guys what we are seeing as real estate agents, which is where the rubber meets the road, and let you know of a few key indicators that doesn't show the real estate market crashing.
To get right into it, some of the things, which is you will see a little bit written on the actual article to prove to you guys that we're not just making it up as realtors.
Right.
There's other financial advisors and market statisticians that can back up exactly what we're seeing happening in the local market today. But if you really think about it, back in 2005 to 2007, right before the crash, it was a booming market, just like a booming market for us 2020, 2021.
Right.
But the difference, after when it crashed afterwards, the real true difference is that housing lending was really strict after the crash. It got really strict, and then the lenders couldn't just, they got rid of some of the subprime lending, some of the bad practices that were going on back then. It got stricter. You had to show better finances. You had to have your down payment. Back then, there were a lot of ARMs, and ARM stands for adjustable rate mortgage.
Right.
A lot of adjustable rate mortgages, one little thing change, and boom, you can't afford your mortgage anymore. Well, which
your ARM is still able to get an ARM today, but we're just not seeing a lot of those. We don't recommend it.
We don't see a lot of those.
Right.
I mean, it's just like anything out there. You have to know what you're getting into before you make a decision. Some people, investors specifically, use adjustable rate mortgages to their advantage, but for the majority of the people out there, it is not recommended, especially if it's just your personal home. So right now, most of the sellers at this point have fixed rate mortgages.
Correct.
They have equity in their home.
Yes.
Lots of equities because the property the property values went up. So these are, they have better credit scores. They couldn't just get a loan before with a low credit score.
So essentially, the homeowners today are homeowners because they can actually afford that loan. They can afford that particular price home as well.
So we're telling you all of this, not just because we are explaining to you, that, okay, great, we have great sellers now. No, all of that makes for a lesser of a chance for this, for the crashing, because there won't be a lot of foreclosures.
Correct.
Back then, you expected foreclosures. They could barely afford the home, and then the houses lost half their value.
Yep.
Right now, you're just not seeing that.
Yeah. In fact, not only then houses lost half their value, but at the moment now, these houses are still gaining value. If you bought a home at this time last year, you could sell it today, depending on the price of where you bought it and how well of a deal you purchased. You could make $20, $30, $40, $50,000 on reselling that property.
Don't come back and say,
this
you said I would make $20,000.
But if you want to find out, give us a call. We can definitely let you know.
Yeah, so that's just one of the major reasons why we see overall, like whether you're in our local market or outside where we don't really see any signs of, the market crashing.
And I would like to say, in my opinion, these reports that the housing market may crash is because our interest rates nearly doubled from last year. We went from 3 to 4 to 5, and we went all the way up to 7%, which, by the way, we bought our house at a 7% interest rate. Now, this was November and December of 22. In January of 2023, the housing market really just came to a halt. Like, there were barely any closings because, people was fearful of paying a 7% interest rate, so they wanted to wait to see if the interest rates would come down. Well, we were expecting February for the interest rates to go down to from 4 to 5, but they didn't. So what I think happened is those buyers and sellers eventually was like, hey, this is what it is. We need to buy, we need to sell. Let's just do it now instead of waiting it out.
The basic knowledge and decision making is still out there about renting versus buying. They have the credit score and they have the money and they need a place to stay. If they can do all of those things and it makes sense to buy, even at a 7%, people still pulling the trigger and buying. They just needed a little bit of time to get over the sticker shock. I mean, because it is a sticker shock. You're paying double what you were paying before for a property, but
you know what helps?
Move forward.
What helps is actually today the rates for VA and FHA has gone down into the 5%. So that helps. So for those people like myself that bought at a 7% interest rate, we can now refinance at a 5%. That's 2% cut off.
So those are all factors. And then right now, if you're watching, this is April of 2023. If you're thinking about buying a home, this is probably the best time for you to go and lock in, because interest rates went down to about a 5-ish. So definitely pull the trigger now. Even if they do go back up and you still need to buy, then just always have that in the back of your mind. Like, hey, I could buy at lower price point and refinance later when the interest rates go down, than to wait to buy later when the prices most likely are going to be higher. And even if the interest rates are lower, then you still lost because you had to end up buying at a higher price. Then another point is why the difference between a home seller then and a home seller now. When the sellers bought their houses before they went up, they were what, like under 5%?
Yes.
And then now they get ready to sell. The new buyer is going to be around the 6-7%, but their house is going to be a higher price point too. So
it's true.
They just bought at a much better market for them, and it will be probably hard to go back and see that market again. So we're going to make a decision. It shouldn't be stalled over interest rates.
Right.
So.
And one of the last things that I kind of want to talk about is the fact that what we've been seeing in our business is we were expecting houses to take up to 90 days to close because of the higher interest rates. However, even though the interest rates have been higher, we've still been selling homes within a week, 14 days, 21 days, just really depend on if those sellers did what we asked them to do in order to get it sold in the right amount of time frame.
Yeah, the basics, the laws never change. It's 3 things: sell a property: price, condition, and marketing. I know that HGTV has you guys saying location, 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 but location is just part of the strategy for the price. You know what I mean? Like, you could be in the right location and price too highly, your property still won't sell. So just think of price, condition, and marketing. So ultimately, that's what's going to sell your house if you're looking to sell. It's going to be, are you priced correctly? That's the main thing. Then after that is the condition of the home. Does the house look nice?
Right.
And thirdly, the agent you choose, are they marketing the home correctly? So
thank you for sharing that. That's very important.
Absolutely.
Lastly, think about your exit strategy. Okay? When you buy a home, there's going to be an exit strategy. Or when you're living in a home, there's going to be an exit strategy. Do you want to continue to rent? And when you move out of that rental property, do you want a security deposit of $1,500 to $2,000, what you put into the property at first? Or do you want to leave with $20,000 or $30,000 in your pocket by buying that home? The decision is yours.
Yeah, definitely. Alrighty. Well, thank you so much for watching this video. It's a little longer, but it is also our 90-day quarterly newsletter. We wanted to give you guys some education, something you could share with your friends or family members that are looking to sell or buy. If you're in the North Augusta, South Carolina, Aiken area, then give us a call. We'd love to serve you. If you are not in our area and you're looking for a great connection, you need an agent wherever you're at, then give us a call still and we'll be glad to connect you. Thank you so much.